Please welcome Alexandre Tombini, Chief Representative, BIS Office for the Americas, Richard Byles, Governor of the Bank of Jamaica, and Bloomberg's Shery Ahn.
Thank you very much for joining us for this conversation. What an exciting time, isn't it? Especially because of the topic of this panel at a time when we had really Terra USD collapsing, a meltdown really in the crypto world. So this really raises key questions for not only crypto assets, but stable coins, and of course, the closest analog to stable coins, perhaps central bank digital currency. So what a great time to have you both here. Thank you so much for joining us here in Panama City. Should I start with Alexander? Let me just start with everything that's happening around the world right now as we see this huge collapse, lots of volatility even today. Will this whole meltdown have consequences broader than just the crypto world, especially when it comes to perhaps a threat to the financial system itself?
Well, I think the crypto world has grown very much in the last few years. 2021 was a big year for crypto, stable coins and unbacked crypto assets. And what we have seen recently first has to do with tighter global financial conditions, right? Unlike promise made earlier that this was like a hedge for inflation or something like digital gold, some of these cryptocurrencies, it's like any other asset and has been affected by global financial conditions. So implications for the broader economy, I think this is an area which has a lot of momentum trading that we have seen in 2021, supported by easy global financial conditions, and now we are seeing the reverse. The market was close to $3 trillion in November 2021. Now it's more like closer to $1 trillion. So there's a lot of wealth that has been destroyed in this process. This, of course, has implications for the economy, but it was growing and has very important features.
But are the implications as dangerous as being an actual threat?
Well, right now we have seen a reduction to a third, almost a third of what it was in the heights of November 2021. And is one more asset, of course. Assets in the world are north of $100 trillion. So we're talking about so $2 trillion in this process. Yeah, it's meaningful. And but we'll see. There are some features which are important in this market that can be emulated by other initiatives.
Richard, what do you think?
Yes, I mean, I'm not a big crypto fan, neither personally nor as a central banker. Currency for me has to be stable, and cryptos, because they are traded, means that they have a lot of volatility in it, so we stay far away from cryptocurrencies.
Does it raise the case for an actual central bank digital currency, which is what Jamaica has done?
Well, a central bank digital currency, say in Jamaica, serves our domestic market. It's intended to stay within our borders, not to go beyond that. Once you step outside of the borders of a country, you have to deal with regulations of AML and CFT, and that's a whole different world because everybody wants to know who is sending the money and who is receiving the money internationally. And it's all part of what happened after 9/11, right? So in the borders of Jamaica or any other country, we can develop a central bank digital currency that allows persons to send money person to person, person to business easily. But once we step outside of the border, we run into all of those regulations.
Does the instability that we're seeing in crypto assets, just because of how perhaps people who are interested in those assets are also interested in digital currencies, does that raise the threat given that this is proliferating just so fast?
Well, I think people who are interested in cryptocurrencies are really cross-border traders. While central bank digital currencies, so far at least, have been within a country's borders. So I think a lot of persons are interested in how can I move money from one country to another swiftly outside of the banking community. But for central bank digital currency, we don't have those problems internally.
Alexandre, tell us a little bit about the state of CBDCs at the moment, globally, how interested central banks are. And if, as Richard says, it's mostly to look at it through the lens of domestic payments.
Well, each country has a different idea, but the overall picture from our survey, using data up to the end of 2021, is that 90% of central banks surveyed are engaged in one form or other of CBDCs, right? With respect to crypto, the growing market of crypto in 2021, this was said by 60% of our surveyed central banks to be a motivation to prioritize CBDC. The pandemic also, which has incentivized contactless payments, has also been a factor for 30% of the survey. So there is a lot of engagement. I mean, you're talking about this, what's happening with the crypto market. I think that will be further motivation for developing further CBDCs by the central bank community.
In Jamaica, we have a national program of trying to digitize the economy. So whether it has to do with payment services, it has to do with government services, has to do with paying taxes, paying fees, national identification, we want to digitize all of that. And the intention is to make doing business much easier, more efficient, and more quick. Central bank digital currencies have a lot of advantages locally. They're secure, they're very fast, and they tend to be more inclusive, bring people into the banking community, people that stay outside of the banking system because of inefficiencies, because of the cost to do with transactions in the banks.
But one of the biggest benefits, especially when it comes to reducing costs, for example, is to actually be able to, as you said, send money with less costs overseas as well. So why would Jamaicans choose CBDCs over, say, other crypto assets?
No, you can't use CBDC and send money abroad. Let me say again, you know, our borders, once you step beyond the borders of a country, you run into regulations, laws that have to do with money laundering and counter-terrorism financing. So you have to be mindful of who is sending the money and who is the money coming from. So the banks, if I'm sending money to you in New York, your bank in New York is interested in who am I, and my bank in Jamaica is interested in who are you, to make sure that we're clean and that we're not part of any terrorist network or any money laundering network. And that's where the banks play a big role. And they use their system, which is called SWIFT, to move money from me to you. Now that SWIFT system, as its name suggests, is quite swift, but it does have bank charges that are attached to it. And I think that's what people want to get away from, a lot of those charges that are involved with moving from bank to bank.
Also, the reason that perhaps some of these people are using crypto assets is the idea of democratization of finance, right? Alexandre, what are the risks associated to that, and perhaps how does CBDCs compare in the way, as Richard just mentioned, about more safety, transparency as well?
Yeah, just to go back to the cross-border issue, I think in this survey, central banks are increasingly thinking about CBDC as facilitating cross-border. All the problems that Governor Byles just mentioned are there, but they talk about two specific ones: operating hours and long chains of correspondent banking that you can reduce using interoperable CBDCs. But CBDC is a stable digital currency, right? It will be stable in the sense that it's issued by the central bank. There is a central bank which will implement monetary policy to make things stable, different from the other means of payment, supposedly, like the stable coins.
Right.
So in this sense, yes, it can have the features of the digital, the crypto, or the stable coins, programmability, composability, which are the new features of digital money, but with a liability of the central bank. So you have a centralized, trusted party, if I may say, that will be issuing this digital asset and not, as we see, stable coins today.
And then Richard was talking about all of the benefits and positives of being more transparent and being able to track all of these payments through CBDCs and central banks backing. But I wonder, what are both of your thoughts when it comes to ideas where authorities can actually have too much information and privacy is an issue? Last year, for example, the PBOC was talking about anonymous wallets, and all of a sudden when it became about larger payments, they wanted a valid ID. But how do you ensure that that transparency is actually used for good?
Well, in Jamaica, with central bank digital currency, we at the central bank won't know who is doing what transaction. The commercial bank, if they are requested to, and we can talk about that in a minute, they can trace where every transaction came from and where it went. Now, to do that, in our case, for example, you need a court order. So somebody would have to get authorization from the courts to say, let me go and look for the transaction that John Brown did on the 14th of September 2021. And that can be traced. And that's one of the big advantages of digital currencies. But normally it would be quite anonymous because we're trying to make cash as much as possible free to use and anonymous. And only in exceptional circumstances would we break that anonymity.
Yeah, there is the hybrid system, which is the central bank just record the wholesale, the net value of the payment service providers, banks and non-banks. So, and then the personal information, the transaction at the personal level is at the banks and at other payment service providers. So as the governor said, I mean, only in democracies where the rule of law is there, and then you have checks and balance, institutional checks and balance, you can only go to the who is behind the pseudonymous with a court order,
right,
like bank deposits today in most of democracies that we know. So there is no difference in this respect.
And I would like to remind our audience to submit any questions you might have through the Bloomberg New Economy app. I really wonder also, what about the costs of not only CBDCs, but crypto assets as well, and this ensuing chaos that we're seeing for commercial banks as well? Because I know that Jamaica, for example, you tended to go through intermediary banks where you would not necessarily distribute JAMDEX, but actually use commercial banks. Right. What led you to that decision?
Well, I think there are different systems for central bank digital currency. Either we would go straight to the consumer and give them an account at the central bank, or we go through the commercial banks. Commercial banks have hundreds of thousands of customers already. So why would the central bank want to recreate that distribution network? All the merchants are customers of the commercial banks too, and we want to encourage private enterprise anyway. So we chose to go through the commercial banks. Now, because central bank digital currency is free to use and the banks can't attach a fee to it, there's a little bit of reluctance to embrace it and to take it to market. And so we have to be very encouraging to them to take it to the consumer and to take it to the merchants. But I think that what they're looking to do is to wrap that CBDC in a wallet where they can offer many other financial services, and on that basis distribute it to their customers. So I'm looking forward to the near future when those wallets will become public and will become interoperable and begin to gain momentum.
If I may ask a follow-up on how the rollout of JAMDEX is going right now. I know that it's a pilot program, but we've seen other economies, especially in LATAM, like Ecuador, who released a dinero electrónico years back. They stopped because it wasn't really being that popular among the public. What are you seeing?
Right, so we're still in the pilot stage, and I therefore can't comment as to how popular it would be. But, I mean, you know, once we have the banks in support of it, I think it's not a hard thing for the consumer to be won over, because they're all using phones already. In fact, the number of phones in Jamaica outnumber the number of people. So everybody is au fait with how to use the phone, and to move currency around with a phone would be second nature to them.
Alexander, just going back to the idea of disintermediation of commercial banks and perhaps some of the risks posed by all of these crypto assets and CBDCs just competing with the traditional financial system. What are your thoughts?
Well, depending on how you design the CBDC, of course, central banks are fully aware of these potential consequences. So if the CBDC will pay interest, then it will compete directly with bank deposits. So the transmission mechanism of monetary policy will be faster as far as deposit rates are concerned, okay? But what we see is that central banks in general are looking CBDC as a complement for cash. So it should be a footprint which it resembles the footprint of cash, which on average is around 10% of the means of payment. So yeah, I mean, I think the community is fully aware. There are sort of measures to mitigate potential disintermediation, like limits, like not paying interest rate. If you pay interest rate, you pay less than the deposits at the commercial banks. So there are many.
But that's an interesting data point that you mentioned. 10%, cash represents 10% of money. In Jamaica, it's 22%. And what that means is that we are a highly cash-driven economy. And cash is very expensive for us to mint it and to distribute it, very expensive for the banks to hold it and distribute it, very expensive for every single businessman to take the cash, secure it, transport it. So CBDC offers a massive opportunity to take that cost out of all levels of that system.
But aren't there other costs involved for CBDC? Security, for example. How do you stop hackers from really infiltrating your system as well?
Well, that is a cost that we at the central bank have undertaken, and we have had international companies ensure that we are as secure as possible. So we will accept that cost. And I can tell you, that is a tiny fraction of the cost of printing and distributing cash.
I would say this pertains to the electronic payments in general, not CBDC in particular. Of course, CBDC being a claim on the central bank, then we have the reputational, potential reputation implications. So I think this issue of cybersecurity and security of information related to CBDC is an important issue, but it's not different from what we have today with digital payments in general and electronic transactions in particular, but it's the fact that it's, at the end is a claim on the central bank.
If we have eventually more, as you mentioned, interoperability between CBDCs of global central banks, Alexander, do you think we'll get to that point in the future, years from now, where we could actually see this compete with the global monetary system and perhaps a dollar-denominated one?
Well, I mean, the reserve currency status has to do with many things. Rule of law, the strength of institutions, and especially liquid markets. So if you don't have a liquid market, even if you have the best technology, you will not develop a reserve currency. So I think these other issues are much more important. Technology can help, can facilitate trade. We talked about long corresponding banking chains can be reduced. Operating hours can be 24/7. But at the end of the day, it depends on the willingness of countries to work together to make their system interoperable. Of course, the issuing central bank, if it's a reserve currency one, will have to authorize the holdings by non-residents for this to be, say, substitute currencies around the world. So there are.
Richard, do you see that in the future for Jamaica at some point?
Well, you know, if I want to send money now, US dollars, I can. It's out of my US dollar account in Jamaica, send it to anyone, anywhere in the world. I don't need a digital currency to do it. I mean, the transfer of money today is digital already. It's just that it has to go through the banking system. And I think that's where a lot of people have a problem. It's a little time consuming and it costs, but it's the safest way to protect us against the money laundering and the terrorist financing.
The idea, though, right now is with the proliferation of CBDCs, especially if you have this coordinated action among global central banks, that perhaps you could have any currency in the world have that exorbitant privilege that the dollar has. Do you envision a world like that at some point?
No, I think if you think of it, and if we were the world, everybody in here, the entire world, whoever has the most trade with each other, they have the best opportunity to have the international currency. And whoever has the deepest liquidity, the same thing. So I think that the countries that have the largest share of trade and who have a currency that has a track record and who has a currency with liquidity, they have the best opportunity to make that currency digital. And I know that the United States, the Treasury, not the Fed so much, is discussing e-money. And e-money is going to look very much like a digital currency that is international. And I think that we'll see that in the next year or so, piloted by the US.
Alexander, what do you think? And also perhaps adding to those thoughts by Richard, what about the geopolitical angle to this question? Because of course we have, as you mentioned, the US Treasury also headed towards that direction, but the Chinese digital yuan is now really being pushed.
Yes. Right, I think for this cross-border integration, you have to have the will, right? If the geopolitical situation changes and you have more fragmentation, you also have fragmentation in the payment system, international payment system, right? So at the end of the day, regarding the status of a currency, I think it has to do with the size of the economy, trade, as Governor Byles said, and the depth of your financial system, because nobody holds currency. People hold asset denominated in currencies. If you don't have a large economy, a large financial sector, a large generation of high-quality assets, you will not dominate the world as a international reserve currency or the reserve currency of the world. So it has to do with other things. Technology, being disintegration, of course, geopolitics affects it. It makes the world more fragmented, so less willingness to integrate some areas. But you can have regional integration being accelerated with these digital currencies.
Richard, just finally, we have seen this huge uptake of CBDCs, especially in Latin America, whether it's crypto assets or CBDCs. Why is that, and will we see more of it?
Well, one of the reasons in Jamaica that I think it will be successful is that if we have 70% of the persons of Jamaica have bank accounts, but many of them don't use it because of the fees and because of the inconvenience. And what a digital currency will do for them, as in the rest of Latin America, I presume, is give them the freedom to move money around very efficiently without touching the banks. I think that is a big impetus for persons.
Just convenience and
yes,
us being very lazy
efficient.
about everything, right?
Very efficient.
The drive for digitization. Thank you so much for having this conversation with us, and thank you so much for joining us today.
Thank you.
Our pleasure.